Hi, I'm Michael Newrock, and today's lesson is on keeping a trading journal. Now, as you trade, you need to log all your trades. What I mean by this is you need to keep a record of them. And I'm not talking about the account history in your MetaTrader account. I'm talking about logging every single trade you do. Now, if you like, you can do it on a spreadsheet. If you're a bit more old school like me, you can just jot them down on a pad. Create a pad, set aside a pad specifically for your trading journal. I'm not talking about 1 page or 2 pages. If you don't have a pad, go out and buy one, title it up, trading journal, and that's it. Don't put anything else in there. Nothing, okay? Not the trades that you're watching that week, not what's on TV that night, not what you've got to do later on that week or month or someone's birthday, just your trading journal, okay? So as you go over the coming weeks and months, you'll be able to look back at it. And what I want you to include in this journal is all your details of your trades. Like I said, if it's easier for you to set up a spreadsheet, then do that. But what you need to cover is the trade that you took. That's the symbol. So if it's the euro, the EURUSD, the day that you took it, the time frame that you took it on, the type of trade that you took. Was it a trend trade? Was it a swing within trend trade? The direction of your position. Was it a buy or sell, or long or short if you prefer that definition? Whether the trade was profitable, whether the trade hit its target, whether the trade got stopped out as a loss, what was the price of when the trade was exited, and what were you thinking when you took that trade? Also make another column, what was going on in your life at that time, and what was your mood? Were you in a good mood, positive mood? Were you in a negative mood? Write it all down. Okay, it's important. You may not think that it's important, but it is important. Whether you're a newbie or whether you've already been trading for a few years, it's really, really important to log all your trades. Include information on what your plans are for each trade. So have a plan set out in that journal. Put little reminders for yourself. I'm going to exit this trade if conditions change, or I'm going to stay in this trade for as long as I can and manage it appropriately. Whatever it happens to be, there's a lot of information there. Do what you feel is comfortable for you, so you can reference that information later on. Again, it doesn't matter whether it's in a pad, you just scribble down some notes, or whether it's in a spreadsheet, whatever works for you. But just make sure that when you take a trade, after you've taken a trade, put it down in your journal. Go over the details of the winning setups. Okay, so once the trade is completed and you're celebrating and you're having a glass of wine or a nice dinner and you're retelling the story to your loved one that you just had this fantastic trade and made you $280 or $2,800 or whatever it happens to be in your situation, then go over the details of the winning setups. Just go over all the information that you've previously written, including, importantly, what was your mood at the time on that day? Okay, that's more important than you think. Humor me, just write it down, and I assure you that over time, patterns will start emerging, and you'll start recognizing those patterns. And hopefully, if you do everything that I'm advising you to do, and you come along this journey with me, you will be a better trader by the time you get through the other side. That's my goal. That's my mission. And conversely, go over the details of the losing setups. Okay, was it a unidirectional trade? Was it a buy only or a sell only? Was it an aggressive trade? Had you put in not enough of a margin in your stop loss, not enough pips? Did you put too many pips in and you stayed in the trade longer than you should have? So use your trading journal to verify your trading methodologies. It's the only way that you will be able to determine whether you are on the right track or not. It's not just about whether your account balance, whether the capital in your account is growing or falling, rising or falling. You want to confirm back to yourself whether you are doing the right thing, whether you are over trading, whether you are trading when you shouldn't be trading, whether you're missing trades when you should be taking them. All of these things come to play. Trading is not something that you're going to learn overnight. I guess the analogy there is you can learn how to ride a bike overnight, like a little push bike. But a fighter jet plane, yeah, that's going to take or a helicopter, that's going to take a little bit longer. Actually, on a side note, does anyone have any one of those new drones? I've got 3 young kids, and it allows me to relive my childhood with all the really cool toys that I wish I had that weren't even invented back when I was a kid. But anyway, drones, they're not that easy. You really need to practice. Start with like a $15 little one, which they are amazing as it is, and then build your way up. Okay. So anyway, use your trading journal to verify your trading methodologies. It's the only way you are going to free yourself from repeating the past. Consider your trading journal as a rear view mirror of your trading. If you don't look in the rear view mirror occasionally, you can't see where you've been, okay? So I want to know, and I'm sure you want to know, I hope you want to know, are you getting better as a trader or are you getting worse? There's a number of reasons for either of those outcomes, and you need to be able to pin it down. You might be getting overconfident and actually your capital is going down. You might have come in and think this Forex Precog, it is awesome. It's the best system I've ever done. I've been trading for a few years and, varied success, or was a break-even trader. And now I'm really confident. Maybe you're too overconfident. Okay. And that's having a detrimental effect on your trading. Okay. Maybe you're taking trades after work, after dinner, after a couple of glasses of wine. Any of that ring any bells? Or a couple of beers or whatever? Questionable whether you should be doing that. Okay. And having a journal means you will be, most importantly, accountable to yourself. So you can start pinpointing where you're going right and where you're going wrong. At the end of the day, the answers to your successes and failures are in the details of your own trades. This is what I'm trying to get through. And I hope that message is clear. Anyone can trade any system, but not everyone can be successful at trading if you are not accountable to yourself, if you are not taking it seriously. But if you do take it seriously, if you are accountable to yourself, if you do take note of when you trade, what you trade, how you trade, and why you trade, I assure you that you are on the path to success. Okay? That's what you want to be. It's down the yellow brick road, right? We all want to be on that yellow brick road. And it is more than possible. It is totally achievable. If you are not on that yellow brick road, then there's something wrong, and I'm sure you know what I'm going to say. It's a number of one of the following. It's either a bad system or bad resources, bad technology, bad advice, bad guidance, or, not being truthful to yourself. 90% of the time you're trading after, a few glasses of your favorite alcoholic beverage. Or whatever the case, I'm not going to get moralistic on you. I'm just making a point that you know why you're succeeding or why you're failing. And I just want you to be accountable to yourself. And the way to do that, among other methods that we have already touched on, the forum, being in contact with me, connecting with other like-minded traders, is your trading journal. Okay, so don't dismiss this as, no, it's okay. It sounds like too much work. Do it. It's like, think of it like training wheels. Okay, do it until you not only feel or think you are successful, do it until you are successful. And how do you determine that you are successful as a trader? Right, because your capital is continually growing on a consistent basis. Every month, the capital in your account is bigger than it was the previous month. And that's not from redepositing funds, right? We can all fool ourselves. It's because of the hard work that you've put in, the discipline that you've put in to succeed as a trader. You're taking it seriously. Now, remember, I touched on a previous lesson that approximately 2% increase in capital per week is approximately 8% per month, which over 12 months doubles your account. I mean, what else do you want? Do you think that you joined this course and got access to all the Forex Precog software to multiply your account by 100 times, 1,000 times? You could do it. I'm not saying you can't, but you're speculating a lot more. You're taking a lot more risks, and there's time for doing that in the future. Okay, I'm not saying that you're limited to only doubling your account every 12 months, which in itself works out. I've gone through the figures before. After 7-8 years, I mean, you've turned the humble 10,000 to several million. So I keep on coming back to this fact, slow and steady. But the bottom line, as I keep on coming back to, is the answers to your successes and failures are in the details of your own trades, and you know what they are. By writing them down in your trading journal, you're going to find those patterns. You're going to find those answers. Okay, the truth will set you free. Okay, guys, this was a short one. Thank you for watching. Thank you for listening. Good trading. Live well, and I'll see you soon.